Welcome to the President and CEO Focus on the Middle Market podcast series, where President and CEO Founder Paul Stukel discusses middle market issues with business leaders from across the nation. Today, Paul speaks with Roger Nanney, Managing Partner for Deloitte Growth Enterprise Services, about the tempered confidence of middle market businesses in the U.S.
Really interesting report, I thought, this time around. And the reason I say that is that it strikes me that there are a lot of dichotomies in this report, which always makes it interesting to try to sort out.
That's true.
I mean, obviously, the confidence levels seem to be still pretty darn good, although there seem to be serious caveats to that, such as, concerns about lack of demand and things like that. Obviously, talent retention, which kind of goes with growth, but is also unusual in this sort of talent-starved environment in terms of skilled talent. So there's just a lot of interesting, M&A. M&A is not terribly attractive, even though all of the conditions for M&A seem to be ideal, both in terms of financial things, in terms of demographics. I mean, it's just a really interesting report. There's a lot of surprises in this. So I guess starting out with sort of the theme of confidence versus sort of pulling back on capital expenditures. The report kind of notes that this is a pause, not really a negative endorsement. It's just a pause in the process. I mean, can you explain that a little bit more? Because I guess I actually wonder about the fact that the vast majority of the respondents believe in growth, that U.S. growth will be 3.5 or less. And I'm wondering if there's been a sort of collective realization that 3.5% is not enough, or less, is not enough to sustain, the expanded capital expenditures. I just wonder what your thoughts are on that, if you could maybe provide a little more color on that.
Well, I think to all your points, it is an interesting report. And from one way of thinking about it, which you sort of hit on, is if you look at the continuing competence of these executives, it's kind of business as usual when you look at the last year, where we've had, just prior to the beginning of last year, we had this cautious optimism that turned into a really optimistic bunch, and then 6 months ago it was really very confident in terms of both prospects for their businesses as well as the economy. And that confidence really continues in this survey. But we do see in the survey, again, as you sort of mentioned, kind of a stable approach, more of a stable set of thinking about things like capital investments and growth. But I think you have to put it in context, Paul, of these are companies that have been in the growth mode now for a period of time, and they're continuing to see that sort of opportunity, but I think are getting maybe the word is a little more tactical in the way they think about approaching opportunity. As you said, there is a pause sort of coming across in the survey around capital investments, but then you see this even more aggressive sort of approach around the importance of technology investments. And so with the prospect of weak demand out there as being a concern, although it doesn't really come across as much in the numbers, because the majority still see their businesses growing. They have grown in the past 12 months on the metrics like revenue, profitability, and their investments have been increasing as well. But I think it's more of just trying to make sure that they're making good decisions, and there are a couple things you walk away with around things like technology investments and the sort of the refocus on talent that that I think provide a little more emphasis in terms of their direction. I'll close, though, as well by saying, there's a little bit of potentially, especially these mid-market companies that are global, with the continued strength of the U.S. dollar, there's some, potential for that to impact them in terms of their sales and their ability to, serve global customers with a little bit of a pricing disadvantage. So that could have an impact as well.
Yeah, for the exporters, absolutely. Yeah, that's pretty brutal. You touched on the talent issue, the retention of talent, voluntary departures, I guess, is the term of art there. As the report notes, that tends to come with the territory when you're in a growth environment, because people have other opportunities, right? I guess that cuts against the grain a little bit. Maybe not cuts against the grain, but it almost magnifies the talent retention requirement, because sort of on the other side of that story is the continued complaint that there just aren't enough skilled people, talent people available, right, in terms of hiring. That in a lot of surveys, including the surveys from your firm, that's been highlighted as a significant challenge. And I guess I was wondering, in the areas in which firms are seeing people leave, are these kind of, middle employees? Are they sort of skilled workers? Are they unskilled workers? Do you have any sense of what that entails? Because that has broader implications, it seems to me, to the future going forward. Any ideas on that, or any data on that?
Well, we actually, in this survey, don't dig into the particular types of employees, although we do look at, general areas of the business, like, and it has tended in the past to be, areas like finance and accounting, production, areas that do, require skill levels that, companies have said they haven't been able to find. So I do think it is more in areas where you're looking for experience. And you're right, you use the word magnified. I mean, these executives are saying, I think it was 63% of them in this last 6 months have seen an increase in voluntary turnover. And new in this report is this emphasis on increasing compensation, which I think you might have touched on earlier. It's an area that's not shown up as significantly in past surveys, and we had a big jump in that area now. So companies are and leaders are, being more taking a higher degree of focus around retaining people. As you know, it's a big investment when you hire somebody, and if you don't retain them, then that's an investment that you end up losing out on. So this whole refocus and attention around retaining employees and investing in training then gives you, the benefit of training those you hire to get to the skill levels you need, but also providing added benefits in terms of career enhancement for, support and retaining the workforce that you have in place.
Sure. And, this, I don't think this was touched on in the report, but, I mean, you're obviously a man who's had a lot of experience in this, in the business world for a long time. I'm wondering, just from your own observations, do you think there's a generational issue here, in the sense that, I mean, there's a lot of discussion, a lot of data that supports the notion that millennials are, who are a little bit, obviously, by definition, a little bit less experienced, but millennials tend to be more, they don't attach to their firm very much. And that there's sort of this transition in terms of how to deal with that reality. I mean, maybe this is just anecdotal, but I mean, Any thoughts on that? Do you think there is a generational shift going on here in terms of retention?
Well, I do think that there are unique aspects to the millennial part of our workforce. I mean, these are, employees and potential employees that generally, they look for, experiences that are going to be career enhancing, and they tend to be more interested in having a balance to their lifestyle and how they approach, work versus the rest of their life, and so companies need to be, they need to have a capability to be able to, attract and retain the millennials. And they're a bigger and bigger part of our workforce, which is really a critical issue for companies to consider. The mid-market companies, I think, have a little bit of an advantage because they offer a flatter organizational structure. They offer, can offer exposure to leadership in ways that bigger companies can't offer, and there's opportunities for, assuming greater responsibilities more quickly. And so I do think, when you look at the millennial population, mid-market companies should think about how they can, better brand themselves with that population, what their employment brand looks like, and what they're, sort of making sure that they have their values aligned with their strategies in ways that millennials and all their employees can connect to, and hopefully, be part of a culture then that helps them to retain those people.
Moving on to one of the major themes of the report is trust, right? Trust between the increasing importance of trust between customers and brands, between vendors and between employees, and the whole, basically the whole 360 degrees of a business. I thought there were a couple of, again, going back to the concept of dichotomy, there were a couple of interesting things there. There have been some recent surveys, and recent meaning as recent as, I don't know, about 3 weeks ago, going back into 2014, going back to 2013, where Americans in general seem to be losing trust in a lot of our major institutions, governments, businesses, religious organizations, the whole bit. And it would appear that, according to the survey results, that executives are feeling that trust has increased with middle market companies, or at least in terms of business in general, compared to 24 months ago. I believe it was 45% said that trust had increased relative to 17% where trust has decreased. I just thought that was interesting because there are very few institutions or even sort of horizontal categories in which trust has increased recently in the past several years. What do you attribute that to?
Well, I think you could point to a couple of things. As businesses obviously become more focused on growth and the importance of, taking care of their customer base and the ability, frankly, of getting the productivity results out of these technology investments, better focus on having their employees maintain relationships with customers, quality improvement in products, all those things tend to provide an enhanced level of trust with their customer base. So, I can see how, these mid-market businesses would view that as improving and frankly view it as an advantage. There's an outside study, it's I think an Edelman study, that states that mid-market businesses enjoy a trust premium actually over the bigger companies, larger corporations, and if they can focus on the trust building around their stakeholder groups, that premium can really be exploited in a way to help them grow their businesses. So it's not surprising to me. I think that the takeaway is the view of these leaders about the trust level within their employee base. If you recall, they said that would be, their view would be the lowest trust amongst the stakeholder groups that were identified in the survey are among employees. And again, back to the talent challenge and the importance of retention, there's a real takeaway there to make sure you pay attention to the attrition and that you do the things necessary to build and enhance trust with your employees.
Be sure to check back for future episodes of the President and CEO Focus on the Middle Market podcast series. Thanks for listening.